Good morning. I'm Vince Lancy. This is the Gold Fix Market Rundown. Today, we're going to be talking about monetary versus non-monetary metal, gold specifically. And we're also going to touch on a report Jeffries put out on Tether, which I think is rather important. But before we do that, I want to play a clip for you. It's a clip in which Marco Rubio, the Secretary of State, says the absolute quietest part of U.S. economic policy out loud. And that quiet part is this: we are no longer the global reserve currency, at least in practice. Here's that clip.
Today, Brazil, in our hemisphere, largest country in the Western Hemisphere south of us, cut a trade deal with China. They're going to, from now on, do trade in their own currencies, get right around the dollar. They're creating a secondary economy in the world, totally independent of the United States. We won't have to talk about sanctions in 5 years because there'll be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction them.
So what you just heard there was Marco Rubio telling half the world and the U.S. public, with half of the world in our hemisphere, that they've decided to not use the dollar. Those people have decided to go their own way, to use their own currencies, whether that's the Brazilian real, the rupee, or something else. And critically, that there's nothing we can do to stop it. That's the important part. For him to say this, for him to say that part out loud, is to admit that there's nothing we can do to stop it short of starting a war. There are simply certain things we can no longer get in the way of. One of them is international trade in food. If you stop someone's flow of food, that's a war. It's one thing to go after a country like Venezuela, which has already been hamstrung by sanctions. But Brazil, that's not something we can interfere with without causing international chaos. So I'll put it to you this way. Marco Rubio just said the quiet part out loud about the global reserve currency. That's the same part we've been saying here and others have been saying for several years now, and that is that the global reserve currency era is over. The world is moving into what people like to call a multipolar world. I'll give you a simpler phrase: regional reserve currencies. China's currency will eventually dominate its half of the global trade, and the US dollar, if it holds its ground, will dominate our half. But let's be clear about something. We don't have half of that trade. We have half of the debt. If we want half of the trade, we have to manufacture again. And if we don't manufacture again, we'll be the ones exchanging our dollars for yuan. Now, Marco Rubio told the truth. And for someone at the government level to say the truth like that is to imply they can't avoid it anymore. On a meta level, ask yourself this: why did he get picked to say it? He didn't look very happy saying it either. And that tells me he was probably chosen to start breaking the news, the bad news, to the rest of our country. This isn't about giving up, to be clear. It's not about losing, but it is about running out of alternatives to keep the global reserve currency exactly as it is. Let's face it, even if the dollar were to remain the global reserve currency, it will remain a global reserve currency. It wouldn't mean much. It would still have to weaken. Even the global reserve currency has to weaken if we want to export, because it only weakens once nobody needs it anyway, the way it used to. Another reason that Marco Rubio, just a quick aside, another reason that Marco Rubio did not look happy making that statement, that's a guy who wants to be president. And you can't be president being the bad cop making statements like that. So you choose: either you weaken the dollar to remain the global currency, or you weaken the dollar because it's not the global currency, but the dollar must be weaker. Here's the markets. 10-year yields are down 2. The dollar is up 1. S&P 500 is up 11. NASDAQ is up 41, 49, I should say. VIX is unchanged. Gold is down $11, down a lot more than that last night. Silver's down $1.20, was also down a lot more than that last night. The Shanghai basis is $8 now, so it's widened. It's widened in the sell-off. It's narrowed in the rally. That's what it's supposed to do. Widened in the sell-off means Chinese demand is sticky. There's your tether. There's your bungee cord. And then in the rally, it narrows. That's because American American supply is getting pulled to Chinese demand. So this you could say is bullish. I'll just say it's normal. This you could say is bearish. I'll just say it's normal. Why is this bullish? Well, because the demand is holding the US price up. And why is this bearish? Well, it's not bearish, but what it is China has stopped chasing. So we're going to bid this, we're going to bid this, we're going to bid this, and we're not going to bid any higher. And so American just starts to come up a little bit. That's normal behavior of a basis trade. And that's what this is. This is a basis trade. Copper is down 4. WTI is up 9, looking good. Natural gas is down 3. Platinum down 32. Palladium down 13, down 15, I should say. Gold, silver is up almost a point. And the grains are off the screen right now. I have to rearrange my things here again, but they seem to be softer. There's been some discussion recently about the export of gold from the US to the rest of the world, and it warrants a bit of clarification for anyone trying to get a better handle on what's actually going on. Last year, for a couple of quarters, the US exported a lot of gold, specifically what's classified as non-monetary gold. Now, we'll define that, what that is in a second. But by exporting a large amount of non-monetary gold, what the US effectively did was reduce its trade deficit and temporarily improve GDP. Now, those are temporary fixes, and that's not really the important part of the story. The most important question is this: what the hell is non-monetary gold? The answer is that it's a euphemism. So let me start with the reality. All gold is monetary. All gold is monetary. All gold is money. That's the truth. But technically speaking, you can't label something as monetary gold unless it meets certain criteria. It has to be in a specific format, a specific purity, and it has to be properly tested and formatted. So gold that's not in the proper bar or coin form is classified as non-monetary gold. It's a work product. It's a necklace. It's jewelry. It's gold being used in a non-monetary fashion like technology. And what does that mean? It means it's part of the economy. Somebody made the necklace, somebody sold the necklace, somebody bought the necklace. That's economic gold, non-monetary gold. So monetary gold, on the other hand, is not part of the economy in that sense. So what's the difference between the two? You're going to love this. The difference between the two is heat. The difference between the two is melting it. So when the U.S. economy exports a large amount of non-monetary gold, think of it as a massive pile of scrap jewelry. Just picture that. What turns that gold into monetary gold is heat. Whoever receives that gold melts it down, refines it, and turns it into bars, and now it's money. It's like a big cash for gold to other countries that are making money out of our scrap jewelry. So when we export non-monetary gold in large quantities, what we're actually exporting is money. And that gold comes back to haunt us. Every time someone sells their gold to a cash for gold operation, think about it at an economic scale far larger than your grandmother's necklace. What we're doing is converting economic gold into money. So I would ask you this: if gold is money and gold also functions as an economic good when it's jewelry, then it's both. And if it's both, how is it not the most important asset on earth? Maybe second only to energy. And if that's true, what does that make silver? Gold is money. Silver, we contend, is more. It's money plus something else. And I think you already know why. Thank you. Moving on. Today, we will be putting out a post called Why Does Tether Really Keep Stacking Gold? Jeffries put out a report the other day. Hat tip to you know who for securing that for us. And that report plainly goes through what Tether has bought and why they would be buying it and what their plans would be for it without saying what they know. And we're going to tell you what we think is going on. So they're buying way more gold than they need. And we hopefully have some insights into that. That'll be going out later today. I'm not really sure what time. Call it late morning. Also, for the founders, we have a CTA analysis masterclass. In the past, I've gotten access to really good CTA reports, and I'm going to break one of those down in detail so that the next time I get one, we can all just look at it and say, oh, I get it. So we haven't done one of those in a long time, but I have a good one. And it's very relevant to gold. It's actually not very bullish looking for gold. But we also have to keep in mind that the CTAs aren't as important as they used to be. So that's something to keep in mind. Yesterday, we mentioned to you that China says to dump US bonds, partly rhetoric, partly threat, partly truth, probably tied to our threat of Iran. They're going to threaten us financially if we threaten them militarily. Goldman Sachs, gold and silver set the pace. Oil is to catch up. All commodities are going up now. Founders early look and gold fix PM. Now, I haven't even touched on what a great day yesterday was, but it's hard to touch on great days and say how great they are when the next day it could be a down day. I don't want people to be lied to. So I'm going to say, yeah, it's a great freaking day. We'll talk about that in the charts in a little bit. Chat relaunch. I promise I'll get this done today or tomorrow. Data. Today's retail sales, which is an important number, but not as important as unemployment, which comes on Wednesday, and home sales, which come on Thursday. And then the most important one, I think, this week might be CPI. Actually, unemployment is probably more important this week. Support independent media, buy a hat, even if you're not a Republican. You know who I'm talking to. Let's go to the actual charts. All right, so this is the chart that I look at in the morning for silver. This is the silver price, and the dotted line is the silver price in Shanghai futures. So you can see as we rally, the spread is now widening a little bit, and as we come off, it closes. I'm sorry, as we rally, the spread tightens, and as we drop, the spread widens, which is the anchor pulling and holding, pulling and holding. That's a good sign. Let's talk about the fish hook. Put a different chart up for that. We got it. It happened. Now, before you get crazy bullish about fish hooks, I know there are a couple people out there that are crazy bullish about fish hooks because they have been so good over this past year. I have to be honest with you. I mean, they have really surprised me. Um, the fish hook is a trade, not a long-term trade. It's a 48 to 72 hour trade. And the fish hook goes like this. Well, that's WTI. I was like, there's no fish hook there. There we are. So you will be tempted to think that this is a fish hook. It's not. It was very close to a fish hook. It was a false alarm. And this was the fish hook here. And so we got the next day. So this is the fish hook. This is, you're supposed to buy this close. And now you're in here. So can we go up from here? Yeah. In the past, have we gone up from here? Yeah. We've gone up shit tons. Today, maybe we're not going to go up. Maybe we're still in this range. Maybe it's not a bear flag. Maybe it's a sideways channel. But suffice to say, I'm going to be longer if we get above 5093 was my number. Where is that number? Let me go to the weekly. 5093. That's my number. I thought I put an alert for that. All right, let's move to silver. Silver, a bigger scare last night. Uh, Interestingly, it was sold. It was sold during Asian hours. Not interestingly, what's interesting, but it's not surprising. Let's put it that way. Asia is well. There's two Asias now. There's 6 to 8, and that's Japan, and then you'll see American influence there. And then from 8 to 10 is China, and you'll see Chinese influence there. And then from 10 through London, it's a shit show. Whoever wins wins. We don't know, but that's pretty much it. Look, I mean, on a weekly basis, that looks so good to me. But hold on. Someone in the chat mentioned something yesterday, or early this morning, I think about 4 in the morning. It looks like we're bear flagging all the way down. It really does. It really does. But that's an intraday chart. So without lying to you, yeah, we're bear flagging all the way down. And at some point, we'll get oversold. Now, this one looks bad, right? Down, up, bear flag down, up. we could be starting another bear flag down. However, I like the fact that we have an 8 there. If we get a 9 and the market doesn't crack below the 8, if this market stabilizes and doesn't crack below 80.80 in silver, then the next leg higher is probably going to take us up to 91 and change, and then we skate through here. All right. I'm Vince. Everyone have a great day. Talk to you later. Look for those reports later on today.